The State of Crypto is presented by Tron, connecting the world to the power of cryptocurrency.
All right, joining us now with more reaction is Caitlin Long. She's the CEO and founder of Custodia Bank. So, over the weekend, thoughts on this UBS buyout of a Credit Suisse deal? Is there more banking sector jitters? Is that a concern that will continue on?
Oh, well, definitely. We've seen signs of real stress in the interbank funding markets and the pledged collateral markets that came about the same time as, well, they've been building, but the real stress came about the same time as the Silicon Valley Bank situation. Everybody was very focused, of course, on that because you actually did see people lining up around bank branches, but the global markets were having stress as well.
Mm-hmm.
So when you look at these headlines, and of course I'm going to ask a bunch of provocative questions here because I know you like
always.
to give very, very staid responses, Caitlin. We've of course talked to other people about this, and they seem to hint that at least the government's forced issues, if you will, with Signature and Silvergate and obviously Silicon Valley Bank maybe there as well, that this was kind of a Operation Choke Point is what they're calling it, 2.0, Operation Choke Point 2.0. That the government kind of thought of it as a way to, came up with this idea, we're going to get rid of crypto from the banking sector, and if it causes an economic and banking crisis in the world, so be it. Where do you stand on that? Do you think that a government which can't seem to get my mail on time also coordinated this kind of attack, or is it just sort of taking advantage of an opportunity that poorly run banks gave them?
Coordination or coincidence?
Oh, no, it was absolutely coordinated. As you guys remember, you had me on. It started with Custodia and the coordination between the White House, the Federal Reserve Board of Governors, and the Kansas City Fed, and then Senator Dick Durbin came over the top. That was in late January 27th. And then it went to the other bank charter applicants, Paxos Portigo, and then, of course, it went to the SEC, where pretty much everybody got Wells notices over the ensuing couple of weeks. And then, of course, the takedown of the banks. That was absolutely coordinated. There is and by the way, we do have evidence for that. I spent 2 days in Washington, D.C. last week sharing details as well as the receipts, so to speak,
such as
with folks who need to know.
What kind of evidence is that? Documents?
Absolutely.
Phone calls, testimony.
No,
I mean, anything specific, like, hey, we're gonna target Signature, we're gonna target Silvergate. These guys are involved in crypto. Ooh, all right. You know what? Look, if it causes a worldwide recession, meh.
No, not that. The targeting of the bank charter applicants. That we do have that in email, and that was coordinated, and it is absolutely illegal what happened.
Right.
Yeah.
Well, okay, you have evidence of that, but is there any evidence that that people in the administration and in the executive branch specifically targeted the likes of Signature and Silvergate because of their crypto holding, because of their involvement in the crypto industry, and therefore, risked causing this kind of chaos in the overall banking sector, just because one day they woke up and said, crypto doesn't look so good.
Oh, absolutely. And as I have said, Washington, D.C. is a sieve. We've had people come forward to tell us who did it and why they did it. They were going after the crypto banks. It's all going to come out, guys. It is in our lawsuit filing. This is all going to come out. Absolutely. The names are not in the lawsuit filing, but the fact that there were press leaks and that we do have evidence around it, absolutely. Let's step back. There is an anti-crypto wing of the Biden administration. And one person came forward and explained to us exactly what happened. There was a power vacuum in the transition between the White House Chief of Staff, old to new, and the head of the National Economic Council, which handles the president's economic policy, old to new. And into that vacuum, in early January, moved this anti-crypto wing. And they're not just anti-crypto. There is a group that is also anti-tech. They want to bring down big tech and break it up. Okay. And so you start to sort of see these patterns. Now, I don't have direct evidence, of course, of anything related to Silvergate and Signature, but what I do have is a lot of back channel evidence of how the bank regulators have put pressure on the banks that are currently serving the digital asset industry. And boy, there's a lot of smoke with that. And again, the way that we're going to, as an industry, defend ourselves against all this is, Congress can call up the officials and embarrass them. That's not really going to do anything. Congress is impotent. So what can happen? It's the internal auditors at these agencies that can hold the agencies accountable, and they absolutely have power. There is,
will these internal documents be revealed? Do you think eventually?
Yes, absolutely. By the way, folks, everybody on the Hill knew all about this. These are open secrets by now. There were certain things that I was able to help them fill in the blanks, but these are open secrets. The folks on the Hill know exactly what happened. There was absolutely a coordinated attack on this, on banking, the crypto industry across the board. Whether it's the applicants for bank charters who were de novos, whether it's the banks that were actively serving the industry, and the things that are happening behind the scenes. But even bankers have come forward to me to tell me about the things that they've had to deal with from their bank regulators in terms of the pressure that they're getting to stop serving this industry. It is absolutely real.
Retaliation against Custodia for being so vocal about this?
You know what? Look, we have our lawsuit outstanding, of course, and I think stay tuned.
When is your lawsuit being launched?
Oh, it was filed in June.
Okay.
It's been in flight since June.
Your source on Capitol Hill isn't George Santos, is it? Because if it is, we got a lot to talk about here. This is not it's not what you think it is. Okay.
No.
So you don't think that this is just mismanagement at banks, that they had some interest rate risk mismanagement, and it's spreading now to the rest of the banking sector? I mean,
absolutely, Christine. Go ahead.
Well, I mean, initially, folks were saying this is a target on crypto, but now we're seeing this go on to other banks, First Republic, Credit Suisse. It's a global problem. And so
Correct.
It's far beyond just crypto right now. So is it that it just got out of their hands, or they're just sort of realizing now that we've got a way bigger problem on our hands?
Yeah, and that's exactly what I've been saying, is that there are in this wing, this wing has been very vocal in protecting consumers. Okay, no one can argue with that, and going against the banks for so-called junk fees, and the junk fees especially hit folks of lower income, and so there is a goal on the part of, and it's out there in their speeches, on the part of these banks or bank regulators, to rein in the banks that they view as predatory to the lower income consumers. And what they would like to do is to have national banking, some sort of version of postal banking in the United States. Okay, so now by going after the crypto industry, which was clearly filled with fraud, filled with criminals, you've heard me say before, huge swaths of this industry still need to burn down. Needed to, of course, at the peak, and still need to. But there was definitely predatory behavior, no question. They are throwing the baby out with the bathwater. And to your point, though, Christine, I think they didn't realize just how fragile the traditional banking system is. And oh boy, did they get more than they bargained for by doing that.
We also spoke to a former NYDFS representative last week, Maria Rullo, and DFS currently is saying this, that, this is due to leaders and crisis of management, et cetera. And so it has nothing to do, this is not a crypto issue. And just along those lines, you disagree?
Well, no, absolutely. There's no question that the banks made themselves vulnerable across the board. And I think last time I was on, I talked about the fact that at the peak of the crypto market, Silvergate had $13.3 billion of demand deposits that could be withdrawn in the span of minutes and $1.4 billion of cash. Okay, it is not a shocker that when you only have $1.4 billion of cash and 13.3 billion of deposits could be withdrawn in the span of minutes, that when everybody goes and comes and gets their money back, that would blow up. Okay, that was poor management, absolutely. And here's the thing: I think the bank regulators, they definitely have egg on their face, right? You saw Jay Powell up on Capitol Hill for his semi-annual testimony, testifying that the banking system was stable, literally a day before it all started blowing up. And then the head of supervision, Vice Chair Barr, literally said the morning of the Silicon Valley bank run that Fed supervised banks don't have bank runs because they're subject to prudential supervision. Those two statements will go down in history as poorly timed.
So, Caitlin, I mean, the question I wanted to ask before here is this. Is this situation that we see with Silvergate and Signature and what have you, is that poorly run banks are the only ones that are willing to deal with crypto?
No. Oh my, no. Because the entire community and regional banking sector has this held to maturity issue where interest rates went up very fast and they're not marking to market their portfolio. And if they did, substantial parts or all of their shareholders' equity would be written away. And I saw this morning, there's a request for more than 120 banks to get in line and get the same treatment of full deposit guarantees. This is spreading.
All right. So we are hearing latest news that New York Community Bank has agreed to buy a major chunk of failed Signature Bank, according to the FDIC. The 40 former branches of Signature will operate under New York Community's subsidiary Flagstar Bank starting today. We should note that these are the non-crypto related deposits. What do you think will go on from here, Caitlin, as they start selling off these assets of these crypto-friendly banks?
Well, that one's done and wound up with a bow. The only assets that are left are, of course, the crypto deposits and U.S. dollar deposits from crypto firms, to be specific. No digital assets. But the interesting question, it's a rhetorical one, is if nobody can get banking services, then how is the FDIC going to unwind those $4 billion of deposits? Where is that money going to go if the customers can't open a new bank account somewhere?
Mm-hmm. All right.
Your source, by the way, wasn't Joe Biden or Pete Buttigieg, was it?
No.
All right.
They each have their own access to grind. Just.
All right, we'll end it there. Caitlin, thank you as always for joining us this morning. That was Custodia Bank CEO Caitlin Long. And Caitlin, we'll see you in Austin, Texas at Consensus. It's not too late to buy your tickets at consensus.coindesk.com.